Because today, things are about to get pretty wild. Things are about to potentially get pretty crazy. And even though over the last couple of hours, I'd say things have already started to get crazy, and I'm not sure if you guys actually heard my little pump it up, so we might have to pump it up again. I'm going to prepare you guys for whatever's going to happen in the next couple of minutes. I know we have a little bit of time until the FOMC final decision, etc., etc. But you guys understand, I've decided to do something that I don't think a lot of people are doing. I have just deposited $5,000 into an account. And you know what we're going to do, guys? We're going to let you in the chat right now decide if we go long and if we think the price is going to go up, or short and I think the price is going to go down. So you don't have to risk any money, all right? I'm just putting my $5,000 in you guys' hands. Oh, there's crazy cars. And we're going to see what happens. Is it going to pump up? Honestly, we have already pumped up a lot for the Bitcoin price. I'm not sure if you guys have been watching it, but here's the Bitcoin dominance just real quick. I'm going to show it to you guys right now if we can. Here is the Bitcoin dominance. It's been doing pretty well. And the Bitcoin price, actually, I've had a lot of my South Korean guys hit me up a little bit early today, that Bitcoin indeed just crossed ever so slightly above our major barrier, but we're all noticing. We're all seeing exactly where the friction lies in the Bitcoin price, or for Bitcoin, right? And so again, what I've decided to do is load up a freshie, just fresh as a baby's buttocks, whatever. That sounds really weird. I'm so sorry for that. And what we're gonna do is, again, I'm gonna look at the chat. If you guys say, Dusty, open up a long position, we're putting, because again, there's $5,000 in there. We're going to just open up a long position and see what happens. If you guys say, no, I think the price is going to go down, just you guys vote on this. We're going to go $5,000, put it on there on the price to go down. And whatever money we make, we're going to do something cool with that. I think we're going to give that away. All right, so up to $1,500. All right, let's quickly make a little disclaimer right there. Whatever money we make with this trade, we'll make sure it's to be given away. If we lose money, no worries. It's my money that we lose. So that's fine. All right. But that could be a very cool thing. So you guys are incentivized to make sure you don't tell me any stupid stuff. All right. Did I do any research today? I've done it. But we have our special sidetrack for doing the professional trades. This is just between you and me. All right. I'm just going to purely listen to you guys and see what happens. You don't have to risk anything. If our trade does well, you guys get money. If the trade does bad, no worries. I lose money. No problem at all. We're going to cry at home. But that's, I guess, what we're here for. To hopefully give you guys some sort of entertainment by my tears. All right? That's going to be funny. We have Wokes in the chat with the 250 saying, pump it up, baby, pump it up. Again, I got to quickly play it here again. Don't you know, pump it up. You've got to pump it up. Don't you know, pump it up. You've got to pump it up. Don't you? Dun, 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 dun. And you know, the reason I've got this little green thing on here, I literally just ran to the store. All right, if you're wondering, what have I done the last hour and a half? I went to different stores to try find a green hoodie. It was as simple, you know that? I thought it would, let me just quickly buy something green. It looks kind of blue on there, but it's green. Trust me when I say that, right, guys? This is as green as it could be. And again, I think things are going to be pretty interesting from here on forward. But let's quickly put up a vote here. That's blue. But guys, if you, I'll take a picture of this afterwards. Anybody telling me this is not green, get out. All right, it's green. All right, just trust me on this one. It is absolutely freaking green. Anyway, as I said before, we are putting $5,000 on the line, and whatever profit we make is for you guys. Whatever loss we make is for me. Make sure you press that like button, though. If you did not press that like button, you ain't getting nothing. That's it. Make sure you get it going, because I thought it would be funny, you know. It's not turquoise. It is green. Guys, by the way, I have a burger right here. Rate this, please. All right? You guys tell me how good this looks. I've not opened it yet. It just arrived, which is unfortunate, but let's see. Oh, you guys can't see. From 1 to 10, give me a rating on this one. Looks pretty good. It's pretty good. It's on the side, right? We're just gonna hey, I'm seeing a couple of solid. Who's saying 6, guys? This burger is freaking amazing. Even the lettuce is green. This thing looks awesome. Who's saying 6? You guys deserve, like, I don't know what you're into. This is a 10, guys. Come on. Hungry? All right. Let's quickly set up a couple of things. First of all, let me quickly think about exactly what our plan is going to be. So, probability-wise, all right, let's quickly go over that. The majority of people have said, there's going to be another interest rate hike. I've been watching, and we have seen that the Great Britain, the UK inflation, has actually come out higher than was anticipated. right? The forecast was 9.7%. It came out at 10.4, which is awful, right? That's really bad. That's not a good thing. Now, again, over in South Africa, it's kind of similar on par. But so this basically means the inflation has gone up in the UK. And right now in the US, again, they're looking to combat the inflation, which is why they increased the interest rate. And I'm honestly not looking forward to whatever decision is going to be made because, well, probably is going to be an increase of 0.25%. And the majority of people have said, well, that's going to take the Bitcoin price down, which is why I'm not so inclined to open up a long position right now. Vice versa, or I guess potentially opposite way. We have, let me quickly open it up. We have seen just now a major resist at the Bitcoin price level of roughly $28,500. All right, you can clearly see that Bitcoin's been struggling there for a very long while. And so my thought process is, well, unfortunately, we didn't open the stream earlier, so we cannot open a massive short right there. But I'm thinking, well, we have two options. One, we open up a long position, and we kind of wait until we get to the brink where we just previously got some resistance, and we can quickly zoom in to kind of gauge that here. This is not what we're trading on. I'm just checking it out real quick. All right, over on the 1 minute chart, you can see we got ourselves a little top right here at roughly $28.7 thousand. We can attempt our luck here again, all right? Try to open up a long, try to cash out at roughly $28.6 thousand, our major resistance level, and then just kind of free ball it from there. That's a possibility. Or we play it safe, and I guess nothing really is safe inherently, right? Here, nothing. Uh-oh. There we go. Or we quote-unquote play it safe with actually shorting the market because that's what the general populace has been thinking. Then again, the price has been going up for a bit already. What makes you think that right now this little rally here was not just stopped at major resistance, but it will continue on after we get ourselves these announcements? Because it's already priced in probably, right? I mean, we have 90% that says that is going to be an increase, and it's quite logical because the inflation is rampant as they're printing more money, right? Again, there's going to be two major decisions. We have the Fed interest rate decision itself, and then 30 minutes afterwards, we have the Fed conference. And you guys also decide when we take our money out. Again, fresh account, $5,000 inside. You guys make the choices. The profit is yours. The loss is mine. So there's nothing for you to lose. But then again, you guys can also choose, I guess we're going to have to go with a full $5,000. So that means we're opening up a $25,000 position. And also, I think, I'm not too sure about that yet, but I think as well, we're going to do a couple of special giveaways for the people that sign up under me on Bybit. I got to reward you guys a little bit more. So we're also going to do a couple of special giveaways for all the people that have made an account through me and only them. All right, I've said it before, there's a link down below, but that way you get upwards of $30,000 worth of bonuses. So in theory, I could have opened this trade for absolutely free because I could have gotten $30,000 worth of bonuses. I won't brag about this too much anyway, because this right now is just fresh $5,000. I can cash this out right now and buy like, I don't know, 1,000 burgers with that. By the way, I want to eat this right now, but hey, I'm doing a little stream. Hopefully, once we make money, the burger will be free. You know, that's like, it's like free burger. That would be awesome. But I guess to that regard, we shall see. Also, yeah, join the Discord. I think we should also have a little talk. But let's just quickly, it's not teal, it's green. Anybody that says not green, it's wrong. All right, let me quickly end this poll. The majority of people have said we're going to go for a rate hike. Let's go for a little poll here again. And we do a, should we? All right, I've asked the community. Now it's voting time because we're going to be opening up a position. And you guys let me know right now which price. Again, we're putting $5,000 on the line, which is a $25,000 trade. Let's see. You guys are saying it's a 6 because it's cold. Man, it's pretty, you know, I should take a bite. It's a good 7.5. I have ketchup as well, though. Good 7.5. Pretty good. 70% of you guys are saying go long. The box is the same color as your jersey. What? Did I get scammed? I just ran to the store to buy this, guys. It should be green. Anyway, green enough. Green enough. Green enough. No, it's like the freaking dress. You guys remember that dress? The freaking, Wait a minute. Is there somebody in the chat who thinks it's green? Is there like one person at least? Come on. Cut me some slack, guys. Come on. Come on. Come on. Come on. Okay, anybody that says turquoise needs to be banned, it's green. You're officially wrong. Anybody that says it's blue? No, too bad. Anyway, I think the poll has spoken, guys. We have 100 votes, of which 70 people have said let's go long. So the only question is, do we do it now that Bitcoin is actually dumping a little bit, or do we wait? And again, if you guys are wrong, I'm cutting my hand off or something like that because I'm going to lose money. All right, so you guys better think about this properly, because if I lose money, you guys don't win anything. No hikes today? We have some divided audience. That's interesting. Guys, we're all doing this on a voting system, all right? We have ourselves the FOMC meeting, which on its own is amazing. Then afterwards, by the way, I got to get you guys the rundown. We have ourselves the FOMC result, basically. So that means what exactly the interest rate gets to, all right? The expectation is that it's going to be an increase of 0.25%, from 4.75 to 5%. There's a little minority which says there's going to be no rate hike at all, and there's a very small minority which says no, it's going to go from 4.75 to 5.25, which would be crazy for the markets. Now, I've seen analysts say it's already priced in, because what we've been noticing for a little while, let me show it to you guys, is this, where right now the banks are freaking collapsing, it's going crazy, yet it seems that the stock market is not taking a hit because of all this. It seems that nothing's happening, which is odd. And to that degree, I'm thinking, well, it's probably a little bit too perfect as well that Bitcoin's price is such a nice little pump towards the resistance on such strange news and such a strange expectation. Because you got to think about it. The more they have to increase the interest rate, the worse they think inflation was getting. Then again, to a certain degree, even though that's bad for the economy and bad for the general things, it's kind of good for Bitcoin, right? The higher the inflation, the better. Because that means, let's skip this Bitcoin stuff. Let's skip this dollar stuff. Let's go for Bitcoin. I've already expressed it a ton of times before as well. The world reserve currency, which a lot of you guys seems to be like holding on to as if it's your mama, it lasts for about 95 years on average and the median. So right now we are 98 years in. It's not that crazy if the US dollar's reign is just over. It would not be too surprising. It would not be too crazy. All right, again, guys, the moment you want me to open a position, you have to scream now. You have to go type it like crazy, because then we're going to open it up. All right, I'm going to quickly share our stream over on Twitter, etc. And still, guys, make sure you press that like button up like crazy. That is greatly appreciated. Let's quickly share this right here. I also have to share it in Telegram. I'll do that via my phone. Somebody has my WhatsApp. How did this happen? That's strange. Let's quickly see. We open Telegram up, and let's quickly share it in our alerts. There we go. Okay, a lot of you guys saying now. Even though the price is already pumping a little bit. Let's see. All right, guys, sir. We're going to go for a long position, and we're going to do it right now. You guys are ready? And you guys got to also say when we exit it, right? Just so you know. Wait, 2 minutes now? I've seen the people speak. It's already up too much. No, we already wasted money, guys. No, it's up too much already. I should open up guys, I should have listened. I should have listened to you. I should have listened to you. I should have listened to you. Opportunity is gone, guys. It's already pumping too much. I already wasted it. Let's wait. Not yet. Muppet. Hey, I'm watching. Haven't seen it in a little bit. Again, guys, we're just doing this for fun, all right, guys? Please don't take this too serious. Please don't think this is too bad. I have everything set. All we have to do is just, if you guys say now one more time, I'm opening up like crazy. So just say the moment. Please, again, don't take it too seriously. I can lose this money. It's okay. But I have my finger on the trigger right now. But I see 2 people say now. 3 people. Okay, now? Okay. We've opened up a long position. We've opened it up. Officially. $10 profit. $18 profit. We're making money. Whoever said that is a genius. Oh, we only have 5x though. No stop loss. We don't work that way. We work to either the bottom or the top. We can, I guess, increase the leverage. Oh, you guys are amazing. Whoever said that, you're a genius. We're up. Okay, it's not much money, though. We have to increase these odds maybe a little bit. Because let's go for a little bit of a higher... we're too late with increasing the leverage, though, I guess. Let's go for like 10x. We're a little bit late to the party for 10x. Let's wait with that. I dare you 100x. 100x is too crazy. That's really funny, though. You guys are spot on. Are there some freaking hidden traders in this chat? Don't you know, pump it up. You've got to pump it up. Don't you know, pump it up. You've got to pump it up. Don't you? Dun, 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 dun. Let's go. This is not enough money, though. We need to put more. We need more leverage. All right, should we increase? You guys let me know. Because this is not enough money. Wait a minute. You want to know a little fun fact? I've actually never traded cross before. I always trade isolated. Out? You guys are too quick with the outs, though. Oh. Guys, I can't keep up. We thought this was going to become a lifestyle stream. There's no outs. We stay in this way. Oh, next time, let me actually grab some. Wait a minute. Where'd it go? I had. Next time we go for the. You know what, guys? I'm gonna prepare some popcorn as well. I did buy it for this special occasion, but we're staying in. We're losing money. All right, you guys are saying, oh. Okay. Let's make sure. This is how we make this. You see, I increase it to 10x and we make money. You see, this is making money. See, this is how you make money, guys. Fritz coming in with the 25 Norse krona. Let's go. Somebody says, don't listen to us. Guys, all we're doing here is basically betting on whatever is happening at the FOMC meeting. Because the moment it happens, it's going to be so volatile, which is why I have no stop loss. And we're going to see what the result is afterwards. All this is like trading that makes no sense because the price is not moving a lot. Which is the only reason why I was afraid to open up at 10x. Because the moment that Bitcoin starts to move, well, because of this, it might get a little bit crazy, if you know what I mean. Somebody says this was just me selling 100. It could be. Let's see how this goes. Let's see how this does. If we lose, it's you guys' fault. Wait a minute. I'm a little bit lost in time zones, guys. So here it says it's 10 p.m. on the interest rate decision, which is 4 minutes. Right here, however, it says it's an hour and 4. But I am a little bit lost. Which time zone am I in? I'm in Dubai time zone, which is UTC plus 4, right? I believe so. 11 Pacific. Yeah, guys, I don't know which time zone. Oh my, I'm lost in time zones. Oh my days. Why is this so conflicted? I thought it was in UTC plus 4. Why am I sounding like a dumbass right now? Hey, can happen to the best of us. UTC plus 4. I mean, UTC plus 4 Dubai time. Yeah, that's correct. And it says here, yeah, 10 p.m., so it's 4 minutes. So why then does this say an hour and 4? How does that work? An hour and 2. All right. Anyway, let's go back to our trade. We are in, but as I said, I think if our trade does well, we'll be giving away $1,500. But I might do like a couple different giveaways because I'm thinking a lot of you guys that are signed up under me on Bybit, you deserve something, right? So I'm going to do a special giveaway only for you guys. And if you're not affiliated with anybody, I got you as well. Join Discord and I'll explain to you guys exactly what to do to enter. But I'll also do a giveaway for all the people that are in America and all that stuff that cannot enter, that do not want to trade. All that stuff is completely fine. I got you guys as well. So we might just split it up halfway. Half of the people that have an account and then half of everybody or something like that. And I think we're going to do $1,500 or something. Because I wanted to give away an iPhone 14 Pro, but I might just do money. We'll see what happens. Let's see. Let's see how this plays out over the next, couple minutes here. All right, guys. Officially, it's about a minute and a half. Let's put your predictions down. And let's hope that we're about to get green. We're about to get green. I'm opening it up on the side as well. Economic calendar. Okay, it's coming in, guys. It's coming in. It's like loading, all right? Even though I know it's like a minute left. It's okay, you can't see it here, but it's loading. I should do more leverage maybe. 10x is low. It's like aching, It's asking for more leverage. It's asking for it. When is the meeting? In about 30 seconds. 55 seconds officially. Some of you guys are saying sell it. Hold. We're holding. Guys, in the moment we have to sell, you guys have to spam sell in the chat box. All right? The only thing I'm thinking is maybe more leverage. But 10 times is easy. So we're trading with... Wait a minute. Wait. We don't have enough money on here. No way. We have to open it up. Buy more? We have, I went to 10x, obviously. We only put $2,500. We have $2,500 left. Guys, say it quick. Long or nothing? Long or nothing? We have $2,500 left. No. Oh. It's not updating. No! I wasted. No! I did not press the button. Could have been an easy profit right there. Oh my days. Why was I pressing on? I should have pressed a little bit lower. No! That's money wasted. Why? It was so easy. This was the easiest money in my life. What happened? Why can I not click properly? What happened? What happened? Why was I so stupid? No, I did not sell. I wanted to increase. I wanted to double my position because we only put in $2,500. It's only a $25,000 trade. We wanted a $50,000 trade, but I messed up. Anyway. Now is volatility time, all right? Now things are about to get crazy. And indeed, by the way, let's quickly see here. Why is it not updating? Oh, yeah. So, indeed, the interest rate is 5%, as anybody would have guessed. I mean, anybody with a brain would have known it would increase, I think. Oh, but that is so unfortunate. What happened right there? Why is it so bad? Now it's going to get interesting, by the way. Now we're going to get the real volatility. This happens every single time. Do you guys say so? No! We're losing money, guys. No! You know what time it is? I think it's time. Guys. I prepare for this. All right? We're losing money. Let's go. It's fine. Oh, no. We're in the green again. Oh, never mind. It's in the middle. I'm not sure what to do. Hold on. You guys are saying. Okay. Going back into green mode. Guys, we're losing money. Any one of you guys who said it's going to go up, you guys have cursed me. All right? Right now, we have 30 more minutes until the most important part of this. It's increased by 25 basis points for anybody wondering. And in about 30 minutes, there's a conversation from Jerome Powell. Eat that burger and hold. And, well, we've seen the economists, actually a little bit earlier, we watched this video, right? Where she basically explains that the projections afterwards are more important than whatever decision is made right now. So as we speak, whatever this number was, we knew it was going to happen. We knew it was going to be this. There was not going to be no pause. So, and we also thought it was going to be priced in, so the price would not move too much. Right now, it's actually inclined towards the upside slightly, because of course we had everything throughout the day go up. So it's still quite a positive result here. However, what matters is what we see over the next, like, 20 minutes or so. Again, in anticipation of whatever the future projections are going to be.
It hasn't really been
you need to be faster.
There's been a lot of forceful response from the Fed.
You're not seeing the pump it up song. Let's try it out, all right?
Insurance.
Sorry, guys. Sorry for playing this in the background. I didn't know. Where's my head? It's a little bit off, but it's okay, I think.
But I think we're all going to be...
Sorry for playing that song in the background. Okay, let's try it again. Let's see. So right now the price is 28.3.
Don't you know, pump it up. You've got to pump it up.
What happened to my phone? Did we lose connection? We good? We alive again?
Don't you know, pump it up.
You know what this song is for, right? I want to look back at the Bitcoin chart and see like 28.7 thousand. Come on, let's go. We're up! Okay, it's starting. I should do more next time. Okay, we have $2,500 more to go though. You guys say, should we open up another position or are we done? Or what's the move next? What's the move? What's the schmove? $2,500 to our use. We are up about 6%, which is peanuts, right? We opened only a trade for $25,000. I want to do at least 50. This is so sad. Open on the dip. All right, you guys scream and I'll open it up. Again, we have about 25 more minutes to fill. So we can also watch this little video in the meantime of what the expectations were. Because she basically said, the guy actually basically said, that, no, she said it, that the expectation that's coming afterwards in the little talk afterwards in about 30 minutes is going to be more important than whatever this result was, as everybody knew it already. Close it on green and then going all short. Let's see again, guys. If you say let's short, I'm all game. But you guys say it, all right? It's only $5,000 on the line. We can try it out. If we make profit, you guys make money. If we lose money, you guys get nothing. So just let me know what to do, and I'll listen. This is now, and this is the test. This is the true test to see how. Wait, you've lost me again. What happened? Am I clear or am I gone? For me, it does not show up. Let me refresh. Oh yeah, I've refreshed. It's all good. There's only a couple of you guys who are saying like to trade something though, and it's mostly people saying sell. Oh no, it's 50-50. Werner says long. Long, all right. But guys, it's already pretty. Guys, no, we only go long the moment that we break through. Right here, you can see a little bit ago, we've already gotten towards these prices. We need a confirmation of some sort, right? Right now it's price discovery. To long here is pretty risky, you know? It's price discovery. Long it now? All right, guys. You sure? All right, we go long. We open another. Yeah, we now have a... Wait a minute, what happened? It's not refreshing for some reason. Did I mess something up? Did I press the wrong button? Margin balance 5.3. Available balance. Okay. Gold is flying. Okay, interesting. It's 25 basis points as expected. Indeed, as expected. As expected. Oh, I'm on limit. That's why. I'm like, wow, what is happening here? Okay. Let's cancel that limit. Let's reconsider this. All right, let's go to market. Because, I mean, we can open a limit order, I guess. We could just increase the price a little bit. What are you guys thinking? $25,000 again. Just checking you guys out. You have an active order. Yeah. Sorry, guys. I didn't check it out. All right. Cancel the order active. I don't understand. Let's go. Long blood. Long. Okay. But you guys are noticing that this is some major resistance that we're longing into right now, right? This is like the definition of stupid. So if anybody wondering, is this smart? No, absolutely not. Because right now, there's a major resistance. And if we go along right now, it's like in anticipation of a breakout, which is extremely risky, makes no sense. But if you guys want it, your wish is my command. So is this smart? No, we should go short right now if we're trying to be a little bit more secure. But if you guys want some crazy stuff, this is so stupid. We should short it right now, but hey, let's stick with this. You guys said long from the start, so we're sticking with it. It already broke out. I think, to be honest, we did not get any proper confirmation. It has a breakout, but we still have yet to see the proper confirmation, I think. Let's quickly get back to this. Yeah, you see, right now we're still on the edge of things, right? You can see, I wouldn't say we're in the discovery just quite yet. We're like on the verge, on the edge. So by me opening a long position right now, we're basically anticipating a further breakout and things to go crazy from here. But it might as well just turn back around because it gets resisted again. So you guys want me to open up a long position just before. It's some scary stuff. Let's get to 200 likes and I'll open up another long. Let's go another $25,000 in. And we'll see what happens from there. If you guys say go for it, let's open up a market order for screw it. It's going to be a little bit more expensive on the fees, but you know what? It's fine. Not yet. Okay, we're waiting. In the meantime, get my burger some ketchup. By the way, was it good planning that I ordered a burger right before streaming? No. Was that, my plan? No. Sometimes it'd be like that. It took me a long time to find the shirt and the... Again, guys, some people ask me, where am I on? Bybit. I'll leave a link down below. There's a link down below always. Again, the reason I say this is because you can get up to $30,000 worth of bonuses for absolutely free. They're just deposit bonuses. Only, however, if you use the link below or any referral link for that matter. Otherwise, I think you get upwards of $5,000 or so. But $30,000 is a lot. It's for free as well. I told you before, if you really play the exchange game smart, I think you can make a couple $100,000 for absolutely free if you're smart with it. It's luck-based though, right? Let's say, for example, you claim $30,000, which is still hard because you still need some money to claim it because it's a deposit bonus. Afterwards, if you put that $30,000 in a position because it's a trading bonus, well, if you lose your money, right? But it's free. If you win, though, it's a lot of freaking money that you win for free. Like this, for example, here. This is my own hard-earned money, unfortunately. But if it was a bonus, well, if I lose it right now, I don't lose anything. But if I win, well, you win money. So, right? Link where? I've put the link. I've pinned it. There's always a link in the description down below, though. And if you guys already have an account, I'm going to do some cool giveaways for only my people. Eat your burger. Oh, yeah, sorry, guys. Again, it's the review still. Looks pretty good still. Okay, let's reevaluate. We have $25,000 left. What do we do? In and out? No. We open something and we stick for it for at least a little bit. Guys, we're not doing short. We're only either exiting it or I guess shorting to exit the position, but then we're done. So we either open one or we're done. Short it. Dump soon. Okay, let's see. You guys all want me to short? Say it now. Gotta give me the details. No, a lot of you guys are saying open. Let's do another poll. All right. There's another poll in the chat. Long or short? Say it now, or we're doing it right now. Right now as you speak. Long? All right, we're doing another long, guys. $25,000 position. We're opening it. Anybody agree? We have only 57. It's not too certain, though. You guys are not as convinced as before. Guys, it is the stupidest point ever to... Why do you guys say... This is why people lose money, you know? You see where we're at? We're at the highest point in so ridiculously long. You guys are saying long it. This is asking to lose money. But the chat has spoken. Wait till Jerome starts speaking, then short. But there's 63% of people that said long, though. Oh, guys, it's so good to short now. It's such a good position. Should we switch it up and short? Okay, do we think it's going to break out or it's going to bounce off? Right now is the key moment. You guys decide. Exit the position and open a new one, or we stick with it. Short it. The people are saying short. Guys, I think we might want to short this. I think we might have a consensus right now. I love you guys saying... Guys, it's so divided. It's so 50-50. Short. Everybody saying short. All right. You will lose. Mine is long. I think it will break out after Powell brief. Guys, that's why we have the voting system. 60% said long. All right, we're staying in the middle. That's why. Too much division. Let's do it again, the poll. Let's ask again. Right now we're not moving, so we have a little bit of time. I'll ask again. Right, we had 114 votes. Long or short? What do we do now? What do you guys say? Let's vote again. And this time it's final. All right, whatever you guys say, we're going for it. I think the result is long, guys. 60-40. All right, guys, we're opening another $25,000 position. If we lose, every single one of you that said long is getting banned. So, you guys sure about this? This is the stupidest thing we've ever done. It's, guys, understand. Anybody that says long, this is betting against the grain here, right? It's like you gotta have a little kook in the brain to actually say right now, let's go long. It's pretty crazy. You're expecting that the Powell speech, which is starting in 15 minutes, is gonna have some mind-boggling news that's gonna pump these prices up to the moon. It's again 57% though. The people don't want to see us win. It's your money. I said every dollar we make is giving away to you. So if we make money, you guys get it. It's not for me. It doesn't matter to me. If we lose, it's okay. It was content. But if we win, that's what we're doing it for. Long 100x, it's your money. You're a devil, motherfucker. You're there's something wrong with you right there. All right, the people have spoken. Guys, I'm so sorry. But the people have spoken. They said another $25,000 long. We have to add. We have to add $25,000. Long to 31,000. This is like how to lose money 101. Oh, why am I listening? No, this is so bad. This is so stupid. Guys, shorting is so smart. You really want to long? You really want to do it? But shorting is so smart. The people have spoken though. It's so dumb. This is so risky. Oh, this. Okay, let's do it. Let's think about this. Yeah, the rational in me says, guys, This is like, we've already had more than we bargained for. We've already gone up a lot. We're facing some major resistance. Let's open up a short right now. Let's catch this bounce all the way towards the bottom again. That's what the rationale in me is saying. But the chat is speaking. Let's open up a short. Everybody agree? Open up a short because probability-wise. So we close this position. We just short it from here. Major resistance, right? It wouldn't be too crazy right now that we're in price discovery, so we just give it a little tap on the back. Let's say, hey, we've done good. Let's short it from here. We're at the top of the top. The vote said long though. No, but it's shorting is better. Get some profit. No, we don't take. We're not gonna take $19 loss. That's nothing. We want at least a $1,000 move. Come on. We have to pull it again because you guys are still indecisive. This is so stupid. Final vote. Final vote. Long, short, or wait. I'll add another option. Wait till speech. All right. The final vote right now. Long, short, or we wait till the speech and we decide then. Whatever is the decision now, we're going for. There's no more debating this. This is right now. This is the decision. All right. If you're wrong, we all unsubscribe. And that's exactly what I'm saying. The person that's wrong gets banned from the chat and you can never vote again. All right, so you better make sure we make money. All right. The people have spoken. You're not going to tell me it's long again, right? Please, come on. Guys, come on. The reason I'm opening these again is because it's smart to go short here. You guys are thinking it's going to absolutely break out. If it does, you guys are geniuses, and I need to kiss every one of you on the forehead because you guys are awesome. Then the people have spoken. We're opening a long position, $25,000 again. This is one of the most like indecisive things I've seen in my life. It's a 35% long, 34. It's 34.34. You guys don't know what you want either. All right, I'm not sure if you guys can see it even, but it's 34, 34, 32. Guys, we're in the middle. We're in the middle. So basically, the decision is, let's wait a little bit. Okay, I got you. All right, right now we're stabilizing anyway. The price is not moving, but it's going to make probably a big move. I mean, the speech is in 10 minutes from now. We have a little bit of leeway here. Sometimes you have to show them the way, Dusty. Short till move-in average, then 25, then long. It doesn't sound that stupid, to be honest. The people who are saying go short now are not that crazy. But then again, the people are speaking for long, so we're doing what the people want. But then again, the general populi is not necessarily the best at trading. So get that $5,000 on XRP, brother, and we will be laughing when we get massive profits. Somebody says vote again, 4 for 4. I think 3 votes should be conclusive. The people have said long 3 times in a row. However, right now, you would have already been down a significant bit, all right? Already down about 15% or so. So I'm not saying you guys are, kind of stupid, but maybe. Let's hope you aren't. Because this is your money that we're playing with, all right? If you guys lose money, I'm chopping my hands off. So pick smart. It dipped, and now we're waiting to go long. Oh, my days, you guys are crazy. Okay, let's mentally prepare for this. You know what? We make another vote in about 8 minutes from now. So 2 minutes before the speech, we do the last vote. Somebody says, it's why we this side of the screen and you're in Dubai with a Lambo. Ferrari, but Lambo would have also been, I guess, accurate enough. That's cool. Okay. Wait, what's happening? Oh, my stream is a lot behind. That's why. Okay, I'm like, oh. Let's put a Lambo on long. I mean, guys, it's a $25,000 position. It's a lot of money, We can make it $50,000 if you guys just say the word. Do you hold any Sologenic? I think Sologenic is quite nice, to be honest. The thing is, I met them a little while ago at the conference in London, I think, and it's just not really my style for right now. I don't align with their ideas as of this point, but I think they can do really well. So the airdrop is nice. Don't buy fancy cars. Oh, definitely not. Don't. Fancy cars are not they're a good investment relatively though. But I'm more into watches. I like watches a lot. Cars are fine. I mean, most of the people that I know that have bought Lambos or expensive cars, really, they've done pretty well. I think one of my friends, he bought a Lambo maybe 2 years ago for maybe 5 Bitcoin or so, and I think it flipped to 20 or 15 Bitcoin, I think a couple months ago, maybe 3 months ago or so. You guys know him. He's also a crypto YouTuber. He had a black Lamborghini Huracan. I think 5 Bitcoin he bought it for, and he sold it for 15 Bitcoin. A little while ago. The DXY just died long. All right. No, we have 6 more minutes until we vote again, because right now the price ain't doing that much. Let's open the 1 minute chart. It ain't really moving, to be honest, so I can eat my burger, finally, by the way. Let's do that. But I wanted to eat the burger while the speech was going on, because then, you know, it's like a waiting game. You can't crash a watch. I mean, you can smack it into the wall and it's broken. So. All right. Just checking everything out. One more thing I'll say is, guys, join the Discord. I'm going to be doing a couple of cool things in Discord, and I've not joined Discord in like months, but from right now forward, we're going to be doing a lot more cool stuff in there. And also, as I said, I'm preparing to do 3 or so different giveaways, and I'm going to give away a lot of money, all right? So I want you guys to be ready for that, and just make sure you follow me on all these platforms. Ooh. You know what we can also do? We can also do that the moment that it crosses this level, we short. The moment it crosses this level, we long. Oh, it feels so funny to be a degenerate in this. I'd rather Discord than Telegram. It's fine. Just join Discord, and I'll be talking a lot in there soon. I think the Discord link is down below, right? So, our degenerate selves. Again, guys, please don't take this too seriously. This is just for fun because we have the FOMC, and we got to put some spice on it, you know? The FOMC on its own is quite nice, but we can spice it up a little bit more. And everybody, if you have not yet, we have over 300 people watching. I want everybody that's watching right now to press that like button. That's what I want. Because I think what we're going to do is more of these streams where we just do a funny position, right? We're just putting some money on the line here. And if we win something, I'll give you guys some. If we lose some, I don't know yet, because I hope we don't really lose too often. So we're going to be fine. But otherwise, we get wrecked, and hopefully you guys can enjoy me going back to a brokey, if that were to be the case. Like from the Netherlands. Very nice. Very nice. I'm just going long, that long, like a pension bonus, unless it's rockets. Ron says, we can only press the like once, lol. Somebody says, you just need a burger. You know what? You can't have a burger maybe, but, you know, I got this burger for you. Right? I'm eating this in honor of you. It's juicy, man. I don't know if you guys see it drip it. That's good. And I'm wasting it. No. Somebody says, above 28.5 long, below 28.5 short. All right. Where you guys are watching from? Which country? Short the burger. Okay, we got a good divided crew. Nobody from the US is watching though today. We have the European squad. Oh, we have Canada. You're a Dutch guy, right? I speak Dutch, indeed. Netherlands is many as the... Nah, I'm not a Belgian guy. Did you guys know? All right, there's multiple countries where they speak Dutch, but they speak a little bit different Dutch. Little fun fact for anybody that did not know. People in the USA are working now. That actually makes a lot of sense. For me in Dubai here, it's 10:30 p.m. But let's see. All right, we are 2 more minutes until we do the poll, the last poll, and that will decide if we open up a long or short going into this Fed speech. Let me quickly open the Fed speech up. I'm not sure why this is so strange. Maybe it was just an hour behind for some reason. For some strange reason. Right now, there's already expectations for the next one, and everybody's saying it's going to be stable. They're not going to increase it yet again. Let's open up the speech again. Just in the background, we need to have it open already. Here we go. This is where it's going to be at. Again, it's going to happen in about 3 minutes from now. Let me prepare the screen. How do we put a... I guess you know what I'm going to do? I'm going to quickly make a little screen here that showcases our trade and this live stream. So if you're wondering what am I doing, I'm opening up to make sure we can show our trade and how things are going together with our live stream, because that's important, you know? Trade for profit. And let's do it like this. There we go. There we go. Let's up this a little bit. Yeah, this is going to look pretty stupid. Not going to lie. This looks very bad. This could work, but you don't see the profit now, though. Am I capable of doing this? I'm not so sure if I am. Big brain time. Oh, my days, I have a big brain. There we go. This should be... Oh, we could just maybe make it smaller? No, because it's not decreasing. Let's try it smaller this way. This is good. I think this is pretty good. Perfect. You see what this is? This is perfection. There we go. So we see our trade. We don't see our juicy profit, I guess, but I guess we could do it like this so we see how much money we're making or losing. And there we go. It's about 1 minute. So we have 1 minute left. I'm opening it up with no sound because I think it's starting like right now, right? At least it should. Yes, they're sitting in the line. Let's open up the sound. All right, last time did we do a vote? And now we're going to decide what's going to be next. So last time we do a vote. Long, short, hodl, do nothing. Last time. All right, this is the last time I'm going to ask you guys. This is the last time you can vote. This is the final decision, all right? Because he's coming, so choose now. It's long. Guys, we're opening up a $25,000 long. Let's go for it. Let's go.
Before discussing today's meeting, let me briefly address recent developments in the banking sector. In the past 2 weeks, serious difficulties at a small number of banks have emerged. History has shown that isolated banking problems, if left unaddressed, can undermine confidence in healthy banks and threaten the ability of the banking system as a whole to play its vital role in supporting the savings and credit needs of households and businesses. That is why, in response to these events, the Federal Reserve, working with the Treasury Department and the FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. These actions demonstrate that all depositors' savings and the banking system are safe. With the support of the Treasury, the Federal Reserve Board created the Bank Term Funding Program to ensure that banks that hold safe and liquid assets can, if needed, borrow reserves against those assets at par. This program, along with our long-standing discount window, is effectively meeting the unusual funding needs that some banks have faced and makes clear that ample liquidity in the system is available. Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound. In addition, we are committed to learning the lessons from this episode and to work to prevent events like this from happening again. Turning to the broader economy and monetary policy, inflation remains too high and the labor market continues to be very tight. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Consumer spending appears to have picked up this quarter, although some of that strength may reflect the effects of swings in the weather across the turn of the year. In contrast, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.4% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. And nearly all participants see the risks to GDP growth as weighted to the downside. Yet the labor market remains extremely tight. Job gains have picked up in recent months, with employment rising by an average of 351,000 jobs per month over the last 3 months. The unemployment rate remained low in February at 3.6%. The labor force participation rate has edged up in recent months, and wage growth has shown some signs of easing. However, with job vacancies still very high, labor demand substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median unemployment rate projection in the SEP rises to 4.5% at the end of this year and 4.6% at the end of next year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in January, total PCE prices rose 5.4%, excluding the volatile food and energy categories. Excluding those, core PCE prices rose 4.7%. In February, the 12-month change in the CPI came in at 6%, and the change in the core CPI was 5.5%. Inflation has moderated somewhat since the middle of last year, but the strength of these recent readings indicates that inflation pressures continue to run high.
No, the guy in the chat was right. No, guys, we're losing all our money.
Inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power,
King's Coming was a genius
especially
here.
for those
He was
least able to
accurate.
meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a 1/4 percentage point, bringing the target range to 4.75% to 5%. And we are continuing the process of significantly reducing our securities holdings. Since our previous FOMC meeting, economic indicators have generally come in stronger than expected, demonstrating greater momentum in economic activity and inflation. We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond. As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate. We will closely monitor incoming data and carefully assess the actual and expected effects of tighter credit conditions on economic activity, the labor market, and inflation. And our policy decisions will reflect that assessment. In our SEP, each FOMC participant wrote down an appropriate
My
path for
burger
the
is getting
federal funds
cold.
rate based on what that participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.3% at the end of 2024, and 3.1% at the end of 2025. These are little changed from our December projections, reflecting offsetting factors.
That's good news. Okay.
These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and
That's
inflation.
neutral. That's fine.
We remain committed to bringing inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored.
Okay.
Reducing inflation is likely to require a period of below-trend growth and some
that's never
softening
nice to
in
hear.
labor market conditions.
Logical, though.
Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Colby Smith with the Financial Times. How confident is the committee that the recent stress that we've seen and you've alluded to is contained at this point, and that deposit flight among mid-sized lenders in particular has ceased?
Thanks. So I guess our view is that the banking system is sound and it's resilient. It's got strong capital and liquidity. We took powerful actions with Treasury and the FDIC, which demonstrate that all depositors' savings are safe and that the banking system is safe. Deposit flows in the banking system have stabilized over the last week. And the last thing I'll say is that we're undertaking a thorough internal review that
We've
will
learned something
identify
today.
where we can strengthen supervision and regulation.
Okay, just a quick follow-up. I mean, given all of the stress and the uncertainty that you've also alluded to in the statement, how seriously was a pause considered for this meeting?
So we did consider that in the days running up to the meeting, and you see the decision that we made, which I'll say a couple things about. First, it was supported by a very strong consensus, and I'll be happy to explain why. And really it is that the intermeeting data on inflation and the labor market came in stronger than expected, and really before the recent events, we were clearly on track to continue with ongoing rate hikes. In fact, as of a couple of weeks ago, it looked like we'd need to raise rates over the course of the year, more than we'd expected at the time of the SEP in December, the time of the December meeting. We are committed to restoring price stability, and all of the evidence
Price
says
not dumping?
that the public has confidence that we will do so, that we'll bring inflation down to 2%
Nice. Okay.
over time. It is important that we sustain that confidence with our actions as well as our words. So we also assess, as I mentioned, that the events of the last 2 weeks are likely to result in some tightening in credit conditions for households and businesses, and thereby weigh on demand, on the labor market, and on inflation. Such a tightening in financial conditions would work in the same direction as rate tightening. In principle, as a matter of fact, you can think of it as being the equivalent of a rate hike, or perhaps more than that. Of course, it's not possible to make that assessment today with any precision whatsoever. So our decision was to move ahead with a 25 basis point hike and to change our guidance, as I mentioned, from ongoing hikes to some additional hikes, maybe some policy firming may be appropriate. So going forward, as I mentioned, in assessing the need for further hikes, we'll be focused, as always, on the incoming data and the evolving outlook, and in particular on our assessment of the actual and expected effects of credit tightening.
Mr. Chairman, can you explain the difference between ongoing rate increases and firming? Does firming imply a rate increase per se, or could policy firm without you increasing rates?
No, I think it's meant to refer to our policy rate. Really, I would focus on the words may and some, as opposed to ongoing. So we clearly were, what we were doing there was taking on board trying to reflect the uncertainty about what will happen. I mean, it's possible that this will turn out to have very modest effects. These events will turn out to be very, very modest effects on the economy, in which case, and inflation will continue to be strong, in which case, the path might look different. It's also possible that this potential tightening will contribute significant tightening in credit conditions over time. And in principle, if that means that monetary policy may have less work to do. We simply don't know. So,
do you have concerns that the hike you did today could further exacerbate the problem in the banks?
no, I mean, with our monetary policy, we're really focused on macroeconomic outcomes. In particular, we're focused on this potential credit tightening and what can that produce in the way of tighter credit conditions. I think when we think about the situation in the banks, we're focused on our financial stability tools, in particular our lending facilities, the discount window, and also the new facility.
Well, now we have no more money to open a long. If you guys said wait,
Nick
we could have
Timmeros, the
longed
Wall
down.
Street Journal. Chair Powell, in your testimony 2 weeks ago, you had indicated you thought the terminal rate would be higher. Obviously, that was before the stress in the banking sector. And I realize there's a lot of uncertainty, but can you explain at all to what extent your forecasts or those of your colleagues or those of the board staff incorporated today a material tightening of credit availability because of the stress in the banking sector, or are you waiting to see it in the data before you incorporate that potential tightening into your forecasts?
So, we've just come from an FOMC meeting, and, the people who write the minutes will be very carefully counting, but I'll tell you what I heard. What I heard was a significant number of people saying that they anticipated there would be some tightening of credit conditions, and that would really have the same effects as our
Okay.
policies do.
Okay.
And that therefore they were including that in their assessment, and that if that turned out not to be the case, that in principle you'd need more rate hikes. So some people did reflect that in their SEP forecasts. I think there may also just have been, remember, this is 12 days ago. We're trying to assess something that just is so recent, and it's very difficult. There's so much uncertainty. So December was a good place to start, and we wound up with very similar outcomes for December. And in a way, the data in the first 5 weeks of the intermeeting period, pointed to stronger inflation and a stronger labor market. So that pointed to higher rates, and then this latter part, kind of the possibility of credit conditions tightening, really offset that effectively.
To follow up, have you considered at all whether your primary tool, the funds rate, is going to be enough to sustain the kind of tighter financial conditions that you believe will be necessary without
Break the resistance. Come
doing
on.
significant damage to the banking sector? Have you,
Come
for
on.
example, considered
Come on.
changing reserve requirements, selling
Come on.
assets out of
Come
the
on.
system, open market
Come on.
account, as a way to better achieve
Come on.
tighter
Break the
financial
resistance.
conditions
Let's go. Come on.
that don't
No.
accelerate deposit erosion, for example, from banks?
We know that we have other tools in effect, but no, we think our monetary policy tool works, and we think
Should I make some popcorn?
many banks, our rate hikes were well telegraphed to the market, and many banks have managed to handle them.
Victoria.
Come on.
Hi,
Come on.
Victoria Guida with
Come on.
Politico. I wanted to ask, you, along with the FDIC and the Treasury, the Fed Board decided to invoke the systemic risk exception to allow uninsured depositors to be protected
You
at
go
these
from
two
red to
banks.
green.
And I was just wondering if you could speak to why that decision was made. Was it purely a confidence issue, or was there a concern that there would be some sort of economic contagion or financial contagion from the failure of these banks?
Come on.
The issue was really not about those specific banks, but about the risk of a contagion
Let's go. Come on.
to other banks and to the financial markets more broadly. That was the issue.
Okay, and then can you also, just
Pump
to
it up, let's
follow
go.
up, can you speak to the role that you will be playing in the Fed's internal investigation on its supervision and regulation?
So Vice Chair Barr is of course leading that review, and he's responsible for it in his capacity as Vice Chair for Supervision. I realized right away that there was going to be a need for a review. I mean, the question we were all asking ourselves over that first weekend was, how did this happen? And so what we did was early Monday morning we sat down and said, let's do this, and he's
Everybody
he was
spam
obviously
pump in
going
the
to
chat.
lead
Maybe
it
it
in
helps.
his capacity.
Spam
So
pump.
I don't,
Come on.
my role was to announce it, and I get briefed on it, but I'm
Come
not
on.
involved in the
Let's go.
work.
Hey, we're in the green. Microphone break. Are we go?
Hi,
we good?
Chair Powell, Howard Schneider from Reuters. So I want to
No.
go back to your February press conference. You mentioned the word disinflation, I believe, 9 or 10 times, a process that you felt was, I forget the word you used, but gratefully underway or something like that. Is disinflation still occurring in the U.S. today?
Yes, I mean, what actually happened, Howard, was I got the question 12 times. So maybe it's a feature, not a bug. But
Pump
so,
the price. Come
but
on.
yeah, absolutely absolutely the same. The story is intact. So it's really three parts, right? Goods inflation's been coming down now for 6 months. It's proceeding more slowly than we would have liked, but it's certainly proceeding. Housing
only we had
services
money to buy the
is
dip.
really a matter of time passing. We continue to see the new leases being signed at much lower levels of inflation. So that's 44% of the core PCE index,
No.
where you've got a story that's ongoing.
we're coming down?
Where we didn't have in February and we still don't have now
Guys, we're
is
coming down?
a sign of progress in the non-housing services sector. And that is, that's just something that will have to come through softening demand and perhaps some softening in labor market conditions. We
Come on.
don't see that yet, and that's of
Pump it
course
up.
56% of the index. So the story is pretty much the same. I will say that the inflation data that we got, to your point, really pointed to stronger inflation.
Pump it up.
If I could follow up on that, I was curious why you don't see more coming from the credit crunch, because it seems to me that's something that you'd actually welcome to a degree and expect. And are you not seeing more coming from that because you don't know, or because you just don't want to have another round of wishful thinking?
So
Everybody
it's
press
really
that
just
like
a
button.
question of
go.
not knowing at this point. There's a great deal of literature on the connection between tighter credit conditions, economic activity, hiring, and inflation. Very large body of literature. The question is, how significant will this credit tightening be, and how sustained will it be? That's the issue. And we don't really see it yet. It's so people are making estimates, people are publishing estimates, and but it's very kind of rule of thumb guesswork almost at this point. But we think it's potentially quite real, and that argues for being alert as we go forward, as we think about further rate hikes. For us, we'll be paying attention to the actual and expected effects from that.
Gina. Hi, Chair Powell. Gina Smilik from the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit, I know that you've got your internal review coming, but I wonder if you could talk a little bit about what you think happened with oversight at Silicon Valley Bank, and whether this suggests that something about regulation and supervision needs to actually change
hold on,
going
wait, it's the
forward.
same thing.
And I wonder, how can the American people have confidence that there aren't other weaknesses out there in the banking system, given that this one got missed, as you noted?
So let me say what I think happened, and then I'll come to the questions around supervision. So at a basic level,
RT coming with the
Silicon
It's
Valley
not gonna
Bank
help our loss, but thank you, man.
management failed badly.
Come on, pump it
They
up.
grew the bank very quickly. They exposed the bank to significant liquidity risk and interest rate risk, didn't hedge that risk. We now know that supervisors saw these risks and intervened. We know that the public saw all this. We know that SVB experienced an unprecedentedly rapid and massive bank run. So this is a very large group of connected depositors, concentrated group of connected depositors, in a very, very fast run, faster than the historical record would suggest. So for us, for our part, we're doing a review of supervision and regulation. My only interest is that we
Other way,
identify
come on.
what went wrong here. how did this happen is the question. What went wrong? Try to find that. We will find that. And then make an assessment of what are the right policies to put in place so that it doesn't happen again, and then implement those policies. It would be inappropriate for me at this stage to offer my views on what the answers might be. You know, I simply can't do that. Vice Chair Barr is leading this.
It's not breaking,
and,
guys.
I think
Might
he's
be time to
testifying
exit our
next week,
position and
so,
take our loss.
But that will be up to him. So that's really where it is. You know, the review is going
What
to
do
be
you guys
thorough
thinking?
and transparent. It is
keep
clear
on?
to your last question. It's clear that we do need to strengthen supervision and regulation. And I assume that, you know, there will be recommendations coming out of the report, and I plan on supporting them and supporting their implementation.
Somebody says short
And
now.
the
inside
final
info.
point, you know,
Guys,
can we
Rebecca,
feel confident
support.
these weaknesses
We
don't
can
exist
exit
elsewhere,
now and
given that
quit.
They got missed at this bank.
These are not weaknesses that are at all broadly through the banking system. This was a bank
Stay
that was
in
an
hold. You
outlier
guys are
in
saying
terms of
stay in
both
hold,
its
but I want to
percentage
exit the position so bad.
of uninsured
I will not
deposits
click it,
and in
but I want
terms
to
of its
stop. Okay.
holdings of duration risk. And again, supervisors did get in there, and they were, as you know, obviously, you know, they were on this issue, but nonetheless, this still happened. And so that's really the nature of the of the review, is to discover that.
Michael
We have to
McKee
look
from
for a
Bloomberg,
short position,
Radio
guys.
and
We
Television.
cannot keep this
You've
open.
been very consistent in saying that the Fed would be raising interest rates and then holding them there for quite some time. Following today's decision, the markets have now priced in one more increase in May, and then every meeting the rest of this year, they're pricing in rate cuts.
You guys think it's going to break? We have to
Are
short,
they
guys.
getting this totally wrong from the Fed, or is there something different about the way you're looking at it, given that you're now thinking that moves might be appropriate as opposed to ongoing?
So we published an SEP today, as you will have seen, and it shows that basically participants expect relatively slow growth, a gradual rebalancing of supply and demand in the labor market, with inflation moving down gradually. In that most likely case, if that happens, participants
brave for
don't
10
see
minutes.
rate
Right.
cuts this year. They just don't.
Calling out my guts?
I would just say, as
think I
always,
can
the
hold
path
this
of the
position
economy is
open?
uncertain, and policy is going to reflect what actually happens rather than what we write down in the SEP. But that's not our baseline expectation.
Well, if I could follow up and ask, as you look forward into the rest of the year here, are you saying that what you see and the 5.1% basically consensus is based on it will be sufficiently restrictive, or is it leavened by the idea of you don't know what's going to happen? In other words, what should people think about in terms of how the Fed thinks about how far it is from the terminal?
Guys, we're doing majority
It's going
vote.
to depend. Remember, we're looking, for purposes of our monetary policy
people
tool,
said
we're
hold.
looking at what's happening among the banks and asking, is there going to be some tightening of credit conditions? And then we're thinking about that as effectively doing the same thing that rate hikes do. So in a way, that substitutes for rate hikes. So
Guys!
the key is we have to have
Listen, man.
policies got to be tight enough to bring inflation down
We
to
should have
2%
opened
over
the
time.
short.
It doesn't all
I
have to
told
come
you all.
from rate hikes.
Okay, but
It
it's
can
okay.
come from
It's okay. We can still
from tighter credit
We can
conditions.
still manage,
So
right?
we're looking at, and we
can still
it's
manage.
highly
Let's see
uncertain how
again.
long the situation will be sustained or how significant any of those effects would be. So we're just going to have to watch. In the meantime, you know, and obviously
It's a majority
at the end of
vote.
the day, we will do enough to bring inflation down to 2%. No one should doubt that.
Let's go. What do you guys think?
Rachel Siegel.
Short, huddle, or long? What do we do? Once he
Hi,
stops,
Chair
we'll
Powell.
pump.
Rachel Siegel from the Washington Post. Thank you for taking our questions. I know we've talked a bit about how Silicon Valley Bank was unique to a certain sector of the economy, but there's also growing concern that there are financial stability risks from the commercial real estate market and loans that will begin to
All right,
roll
I gotta
over
switch shirts
later
again,
this
guys.
year and next, and that smaller regional banks also disproportionately hold those loans. Is there a risk that could mimic the kind of what we saw with SVB to banks that disproportionately are focused in commercial real estate?
So, you know, we're well aware of the concentrations people have in commercial
The majority
real
of people are
estate.
saying short.
I really don't
We
think
exit-
it's
we are
comparable to this.
$700
The
down,
The
though.
banking system is
You guys
is
are saying
strong,
exit
it is
now?
sound, it is resilient, it's well capitalized, and I really don't see that as at all analogous to this.
Spam short, and I'll short right
Would
now.
you be open to an independent
Say wait, and I'll
investigation
wait.
separate from the Fed's probe?
The people speak.
I welcome. It's 100% certainty that
that's
there
like
will
a-
be
it's a big
independent
loss.
investigations and outside investigations and all that. So we welcome.
Trading
when
rule
a bank
number one,
fails,
never close a
their
trade with loss.
investigations, and of course. we welcome that.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Inflation has been rather sticky.
Any one of
so
you guys that just
do
said
you
sure,
need help
you
from
guys
the
need to be
fiscal
banned. It's
side
$100
to
up
get
there.
inflation down
Okay.
faster?
Now we can close it.
We don't assume that.
589A.
We don't give advice to the fiscal authorities, and we assume that
Don't treat with
we
emotion.
take
just
fiscal
wait.
policy as
Chat
as
is
it
deciding
comes to our
because
front
again,
door.
if chat
Stick
wins,
it in our model, along
they
with
get the money.
a million other things, and
But if chat loses,
we
I
have
lose the money.
responsibility for price stability. The Federal Reserve has responsibility for that, and nothing is going to change that. So we will get inflation down to 2% in time.
And if I could follow on that, but they're working, the spending that's happened is working against what you are doing, right? So it's prolonging inflation?
You know, if you have to look at
Up from here, right?
At the
Up from here,
impulse
right?
from spending, because spending was, of course, tremendously high during the pandemic, and then
Come on,
as
right.
the pandemic
Come on.
programs
Don't break.
rolled off, spending actually came down. So the sort of fiscal impulse is actually not what's driving inflation right now. It was at the beginning perhaps part of what was driving inflation, but that's not really the story now.
Let's go to Neil Irwin.
Hi, Chair Powell. Neil Irwin with Axios. Two questions about aspects of the government's response on Silicon Valley Bank 2 weekends ago. First, why is this new bank funding facility done under Emergency 13.3 authority as opposed to expansion of the discount window, changing the terms of the discount window that's been around a long time? And second, can you discuss the Fed's role in the FDIC guarantee of uninsured depositors and why there's $143 billion on your balance sheets last week?
Seemed like the right, we have a little more flexibility under Section 13.3. We've done quite a lot under the discount window as well. We needed to do a special facility that was designed a certain way, so we did it under 13.3. Really no magic to that. It's only available in unusual and exigent circumstances, and it has to
Why am I not listening?
meet
Guys,
certain
I'm
requirements,
following
but
you.
It seemed to
You
be
guys said
the
hodl.
right place. So
I look at this the whole time.
With the FDIC, we're lending
You guys said
to
hodl, I
the,
hodl.
in
That's
effect,
all we're doing.
we're lending to the bridge bank. So that's where the funds came from, and it's a loan that's 100%
It's a majority
guaranteed
vote.
by the FDIC, so there's no risk in it for us.
Chris Rugaber.
Why would you follow us?
Thank
So I'm
you,
seeing
Chris
if you guys
Rugaber
have
and
any
Associated
capabilities.
Press.
A lot of you guys
The
are freaking on point, though. Some
SEP
of you guys
suggests
are
one more
making
rate
us
hike,
lose a lot of money.
as does the change in the language in the statement, in which
right,
suggests
new
that
one.
you're perhaps nearing the end of a cycle of rate hikes. Do you feel, though, that if inflation remains high, you'll be
Come
able
on.
to resume additional hikes as
Not
needed,
doing
or
good?
have you somewhat tied your hands here with these signals about rate hikes coming to an end?
No,
Thank you.
absolutely
You're
not.
awful
No,
traders.
if we need to raise rates higher, we will. I think for now, though, as I've mentioned, we see the likelihood of credit tightening. We know that can have an effect on the macroeconomy, on demand, on labor market, on inflation, and we're going to be watching to see what that is. And we'll also be watching it what's happening with inflation and in the labor market. So we'll be watching all those things, and of course we will eventually get to tight enough policy to bring inflation down to 2%.
Guys, I don't know. I'm not so convinced it's going to work out. But you guys say,
Chief,
hold on. We're holding on.
First of all, I'm curious at what point the financial supports that the
You guys
Fed is
think we'll break through
extending
29,000?
through
You
the
think
discount
we'll break
window and
through
through its
28.5?
enhanced lending facility might be at odds with the objective of
Not following my own
reducing the balance sheet.
expectations, but we're holding
And I'm also curious what your thoughts are on
You guys are king.
not just the availability of
let me know what
reserves,
to do.
but the distribution of them throughout the banking system, and at what point you might be concerned about it being scarce for certain banks.
We keep going down,
So,
though, guys. You sure about this idea?
So people think of QE and QT in different ways, so let me be clear about how I'm thinking about these recent developments. So the recent liquidity provision that has increased the size of our balance sheet, but the intent and the effects of it are very different from when we expand our balance sheet through purchases of longer-term securities. Large-scale purchases of long-term securities are really meant to alter the stance of policy by pushing up the price and down the rates, longer-term rates, which supports demand through channels we understand fairly well. The balance sheet expansion is really temporary lending to banks to meet those special liquidity demands created by the recent tensions. It's not intended to directly alter the stance of monetary policy. We do believe that it's working. It's having its intended effect of bolstering confidence in the banking system and thereby forestalling what might otherwise have been an abrupt and outsized tightening in financial conditions. So that's working. In terms of the distribution of reserves, we
guys are
we
awful
don't
triggers.
see
Holy
ourselves as running into reserve shortages. We think that our
Double bottom, come on.
our program of allowing our balance sheet to run off
You guys are
predictably and passively is working. And of course, we're always prepared to change that if that changes, but we don't see any evidence that that's changed.
Oh, we should have more money to open more positions right now.
Katerina Saraiva with
we only
Bloomberg
had
News.
5K. You already allocated.
The minutes of the January-February meeting, the last meeting, indicate that you discussed the possibility of runs on non-bank financial institutions and the impact of large unrealized losses on bank portfolios. Can you talk a little bit more about that discussion, kind of what was talked about in light of that? And then why didn't the Fed, do anything about that at that point to ultimately prevent, what happened this month?
I mean, to be honest, I don't recall the specifics of that. It's been quite an interesting 7 weeks, but I will tell you though that
You guys are still saying long. You guys
there
are
have been
nuts.
presentations about interest rate risk. I mean, it's been in all the newspapers. It's not a surprise that there are institutions that have had unhedged long positions in long duration securities that have lost value as longer term rates have gone up due to our rate increases. So that's not a surprise. I think, as you know, as is now on the public
All or
record,
nothing?
the
Deposit under
supervisory
$10,000
team
bucks in
was
C?
apparently engaged.
We're breaking through
very
our
much
previous
engaged
bottom.
with
Guys,
the bank.
ain't no saving this anymore,
repeatedly
no?
and was escalating.
Do we take
but,
our loss? What do you guys
nonetheless,
think?
What happened, and so that's really the purpose of one way to think about the review that Vice Chair Barr is conducting, is to try to understand how that happened and try to understand
I think
how
we're
we
gonna
can
lose
do
everything.
better
Let's see.
and what policies we need to change. I mean, one thing is the speed of the. I'll come back to that. The speed of the run. It's very different from what we've seen in the past, and it does kind of suggest that there's a need for possible regulatory and supervisory changes, just because supervision and regulation
are
need to keep
awful.
up with what's happening in the world.
Can
This
you
is a very expensive
confirm
video,
whether
you
or
know,
not the
or
board
live stream.
knew about these
But it's
escalations
okay.
by the examiners in San Francisco?
You guys are
I-
still saying, hold on. You guys are loud. Okay, we're holding on because you guys are saying so. If we lose
Simon
money,
Urbanovich
you
with
guys
The
are getting
Economist.
away.
Thank you very much. Chair Powell, you've stated twice today that all
guys are
depositors'
wild.
savings in the
Holy
banking
smoke.
system are safe. Are you saying that de facto deposit insurance covers all savings? Shouldn't Congress have a say in that? And just by way of example, if a bank with less than $1 billion in assets failed, are you promising to bail out all of its depositors?
Well, I'm not saying anything more than I'm saying. So, but what I'm saying is you've seen that we have the tools to protect depositors when there's a threat of serious harm to the economy or to the financial system, and we're prepared to use those tools. And I think depositors should assume that their deposits are safe.
Go to Greg Robb.
Now you're saying so, huh?
Thank you, Chair Powell. Greg Robb from MarketWatch. I was wondering if you could give us a little bit more color. You gave just a little bit of color. You said during the first week of the Silicon Valley
Let's lose
weekend, you said
$5,000. We're
the
losing it
question
till
you
the
guys
end.
asked was,
We're taking
how
this-
did this
I'm
happen
taking-
when you saw Silicon Valley Bank? So I was wondering if you could go to the Credit Suisse merger. I mean, wasn't that the big gorilla in the room? Didn't you breathe a sigh of relief when that merger happened?
It's not looking good, boys. Regroup.
Sure. So, that was really the Swiss government. We, of course, were following it over the course of the weekend, and we were engaged with their authorities in the way that you would expect, all the ways that you would expect. It seems to have been a positive outcome in the sense that the transaction was agreed to, and it has been, the markets have accepted it, and it seems to have gone well, and I think there was a concern that it might not go well. So coming into the middle of this week, yes, I would say that has gone well so far.
Nicole.
The vote is there.
Hi, thank you, Chair Powell. Nicole Goodkind with CNN Business.
You guys are saying,
in the summary of
hold
economic
on.
projections, the FOMC sees the unemployment rate increasing to 4.5% this year. I'm wondering how you anticipate preventing this from snowballing while using the admittedly blunt tools at your disposal.
So that's
52%
an
says hold,
estimate
we hold.
of
You guys are wild.
what will happen
It's just
as
stupid, but
demand
okay.
slows. and as conditions soften in the labor market.
Let's go.
And it's a highly uncertain estimate, and I mean, there's really, we have to bring inflation down to 2%. The costs of bringing it down, there are real costs to bring it down to 2%, but the costs of failing are much higher. And if you read your history, as I'm sure you have, you can see that if the central bank doesn't get inflation back in place, make sure that inflation expectations remain anchored, you can have a long series of years where inflation is high and volatile, and it's hard to invest capital. It's hard for an economy to perform well, and we're looking to avoid that, and and to get back to where we need to be, back to where we were for a quarter century, and get there as quickly as we can.
0.9% up. Wow, that's crazy. That's too amazing. You guys are still saying hold on, really?
Yes, sir. Historically, it's been hard to contain unemployment.
Everybody press that like button, guys.
The question is, do you worry about some sort of snowball effect, and how do you factor that into your projections and your thoughts?
Well, it depends on whether so recessions tend to be nonlinear, and so they're very hard to model. The models all work in a kind of linear way. If you have more of this, you get more of that. But when a recession happens, the reactions tend to be nonlinear, and that's so we don't know whether that'll happen this time. We don't know. If so, we don't know how significant it will be. And so, we're very focused on getting inflation down, and because we know in the longer run that is the thing that will most benefit the people we serve. That's how we can have we've had very strong labor markets through these long expansions that we've had. 4 of the 5 longest, or 3 of the 4 longest expansions in U.S. history have been really since the high inflation period. And the reason was inflation wasn't forcing the central bank to come in and stop an incipient or an expansion. You can have very, very long expansions without high inflation, and we had several of those, and they're very good for people. You see late in an expansion, you see low unemployment, you see the benefits of wages going to people at the lower end of the wage spectrum. It's just a place that we should try to get back to.
Jean. Hi, Chair Powell. Jean Young with Market News. I just wanted to ask, with all the events of the past 2 weeks, do you still see a possibility of a soft landing for the U.S. economy?
Again,
it's too early to say.
So everybody understands, we're letting the stream decide what we do with our money. This is not my guess here. This is not my trade. Again, everything pointed towards us going down, but we're letting the chat decide. So that's why you're voting every time. It's not me making the choices. The chat is deciding whether or not we go long or short, or we exit, or whatever. So I put $5,000 down for you guys to decide. And if you win, you guys make money. If we lose, I lose money. That's it. So please understand, don't take it too serious.
The likely declines in or tightening in credit standards, credit availability. So we'll just have to see. I do still think, though, that there's a pathway to that. I think that pathway still exists, and we're certainly trying to find it.
You guys are still saying hold. Oh my days. Okay, let's try again. Last time.
Hi, Chair Powell. Nancy
Last
Marshall-Genzer with Marketplace. Just wondering how many financial institutions have been issued matters requiring attention or matters requiring immediate attention citations at this point?
How many? I don't know. But those are serious. Those are serious regulatory, particularly immediate attention. That's and I guess there were 6 of them. So.
And getting to the seriousness of it, how are you going to ensure that banks comply with these citations, take them seriously? How will you enforce them?
That is a great question, and is right in the heart of what the review will be doing under Vice Chair Barr's leadership. So I think that's what you think about. What can we do to make sure? But again, that's not for me to answer today.
So you don't have specific thoughts on that?
Well, I wouldn't share them, because I really, this review's going on, and I want nothing other than us to find out what happened and why, figure out what we can do to do better, and then implement those changes. That's all I want. It's for me to be giving you my half-formed or partially informed thoughts. It just isn't appropriate. There's a real serious review going on with people from all over the Federal Reserve System who are not connected to this, work, not connected to this bank.
hold on.
And under again, Vice Chair Barr's leadership, and I'm confident that it will produce a satisfactory result.
Okay, we'll go to Jennifer for the last question.
Oh, why did you guys say hold on?
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. Curious, how do you view financial conditions right now? If credit becomes expensive enough, choking off growth, as you said you're watching for, would that situation warrant a rate cut? What situation would warrant a rate cut? And have the bank failures prompted any discussion around changing the implementation of the balance sheet runoff? Thank you.
So if chat ever tells you you're stupid, you know you're smart because they're always wrong, all right? If chat ever tells you to sell, maybe buy. You know, maybe it's that's a smart thing.
Yet, as I mentioned, we're always willing to change that if we conclude that it's appropriate, but we're really not seeing any signs there. Sorry, then the question before that was, just give me a...
Curious how you view financial conditions now, and if credit were
okay.
to tighten enough, if that would prompt a rate cut.
So, financial conditions seem to have tightened, and probably by more than the traditional indexes say, because the traditional indexes are focused a lot on rates and equities, and they don't necessarily capture
No stop loss. Come on.
lending
What do you think this
conditions.
is?
So
Children's
we
class?
think that, though. So there are other measures which if they're focused on, bank lending conditions and things like that, they show some more tightening. The question for us, though, is how significant will that be, and how, what will be the extent of it, and what will be the duration of it? And then, once you know that, there's a fair amount of research about how that with broad uncertainty bands, how that works its way into the economy over what period of time. And so, so we'll be looking to see the first part of that, like how serious is this, and how does it look like it's going to be sustained? And if it is, it could easily have a significant macroeconomic effect, and we would factor that into our policy decisions. I mentioned with rate cuts, rate cuts are not in our base case, so that's all I have to say. So, thank you very much.
All right. So, we have a conclusion. I think we have pumping? I think we have a multitude of conclusions, though. Conclusion number one, all right? And this is a very important one. Conclusion number one. Never listen to chat. That's conclusion number one. Conclusion number two. Just trade the most important supports and resistances. And honestly, making money is not that hard. Again, what we said at the start of the stream is, where are we probably going to go down? This level right here, which is $28.7 thousand. What did we go down from? About 28.9. Where did we open a long position? Because you guys are maniacs. 28.4. So was this smart? Well, it was chat. So you decide for yourself whether or not that's smart. That's completely up to you to decide. Can we bounce back and make some gains? Well, the lowest point is in. We've hit 27,000. We've been at minus 2,400 or so. And we're doing pretty good. We have a $50,000 trade open over on Bybit. And there's a link down below to Bybit if you ever want to join me. Because again, I think personally, if you just do the opposite of what the chat says, right now we would have been making $1,600. That would have been pretty juicy. Because again, guys, this challenge was here. Because, if we won, then I would have done a giveaway. About $1,500 was my plan. But we lost $1,600 because we did the exact opposite of what my plan was. We did the chats. And so, what have we learned today? As I said, don't do what chat says. That's pretty stupid. That's one thing. Yeah, that's one thing that's for sure. Don't do what chat says. Second of all, and this is a very important one, higher leverage is better, because then we would have made more money if we did our own strategy, I think. Third of all, let's do this more often. Let's see if you guys can actually trade, because some of you guys have been extremely accurate. Don't listen to the general chat we have learned, but I've seen a couple of you guys say some very good stuff, all right? Do like a Chad Kramer, though. Hey, somebody said it in the chat. Marcus says, Chad Kramer, that coin. Do the exact opposite of what everybody's saying right here, and you'll be freaking rich. It's that simple, apparently. Because right now, we would have made $1,750 if we just did the exact opposite. So, have we learned something? I'd say yes. I'd say that this was a very nice investment. And you know what we're going to do? Let's do it tomorrow. Let's do it again tomorrow. At the end of the day, guys, I put 5,000. You got to understand this. Let me put on the freaking glass. Let's turn on the green. Hey, you see, I went to buy it just now. This is from the store, right? You guys are saying it's not green. I might return it right now because I don't need a green jacket anymore. Apparently, green jackets do not work, guys. It's red all the way. I bought this just now as well. But you see why? Let me show you guys. Let me show you. Wait for me. Wait for me right there. Let me show you guys something. Wait for me. Wait. I have 3. Oh, damn. Okay, I almost fell. Stupid thing. Well, I have 3 red shirts. Why? Because that's just the color that's, working the best. 3 red shirts! How many green shirts do I have? I only have this green sweater that I just bought just now. I went to the store. Because I thought, we're going to make some gains today. Going to do a nice little giveaway. And you guys messed up. So what we're going to do is, I might have to put up another $5,000. Am I happy about that? Well, I guess it's worth it. Because you guys are my everything. So maybe we should. I'm going to put up another $5,000, maybe tomorrow. And, it is green. Anybody that says it's not green, grow up. It's it's pretty green, I think, It's not as green as her sweater from this woman that we saw before, but, it's green enough. It's green enough. What we're going to do is tomorrow, maybe, a couple of days from now, but I think tomorrow, I'll stream again, all right? And this time, I'm going to make sure the stream is a little bit better in the sense that we're going to put the chat in the screen so you guys can see it. And I might figure out a better system to properly open whatever... No, to do the exact... I'm not going to tell you exactly, but I'll listen to you for what your advice is. And, we might do the opposite. We might do exactly what you guys are saying. So, was this a good experiment? I'd say so. Was it worth my money? Obviously, yes. But, I'm never trusting chat again. And if I ever do, guys, make sure I chop my own hands off, because I'm telling you right now, that was not smart. So, Somebody says you will finish streaming and it will pump. I can keep the position open if you guys would want. We can see tomorrow exactly if I lose all my money or if we win. We can't lose any more, right? I told you guys $5,000 on the line. We either go broke or we give you guys a giveaway. That's what we do. So right now we're in the middle. We're at minus 1,600. That's not enough money. We need to either go minus $5,000 or we need to, make some money here. Make at least a little bit. However, what were our odds here? Well, we traded against every single cell in my body to open a position at the dumbest point ever. A multi-top. You can see right here. 1, 2, 3. We traded it the 4th time maybe. The 4th time, or maybe I think the 5th time. We broke through, came back down, and we traded that top. We traded this bottom right here. Was it smart? Well, it could have worked out, but the moment that we broke through our previous resistance level, we should have just sold it and be done, right? Stop loss right there. Would have been a beautiful trade then, though. Would have been a good, nice risk to reward. However, every single cell was selling, well, it's made a new top, and as long as it's not pushing through, so the moment we break above this, let's open up a long position. But as long as we don't, let's short for the meantime. Like a lot of you guys in chat were saying, don't think I didn't see you. A lot of you guys were awesome. And so remember that. I'm going to look back in the chat and see... somebody says you always hype all nothing and now you was wrong. So funny. I wonder how many people will think this was our, it doesn't matter at the end of the day. I love you guys. Every single one of you who tuned in. It was funny. I had a good laugh here. I had a good moment. You know what? Let's keep it open for a little bit while I go pee. Let's see. Let's see if you guys are awesome or not. And whatever happens in the next 1 minute, we'll decide what we do. Somebody says, I should have listened, Dusty. You could have 100x that short and still would have been good. That's true, though. That would have been funny. That would have been way better. Next time, you know what we're going to do next time? I have a very... Guys, listen to me on this strategy. Not financial advice. Maybe it is. This is financial advice. Listen to me here. I got you, all right? Listen to this. Listen really carefully. Put your microphone all the way up. Just don't lose money, all right? If you're doing bad, if you're trading and you're losing, just don't lose. That's a very simple little alpha tip I could give you right here, all right? Let's say it again. If you're thinking about all your losses that you're making and things are going bad, just don't lose money. Just make money. It's as simple as that. So right now you're seeing we're down about $1,600, right? What's the simple cure to this? Make money. So how do we fix this problem? Well, we don't lose anymore. We make money, all right? So where did it go wrong? We lost money. Okay. We learned. Don't do that again. What are we going to do from now on forward? We're going to make money. It's that simple. All you have to do is just make money. We learned something today, guys. We learned that we should make money, not lose it. Oh, you see? Oh, now it's ringing through. There we go. So this 50,000 position, it was well spent on trading lessons. It's really good. And somebody says, and if you're homeless, just buy a house. You see, that's the type of spirit that I like. The moment that you look, wait, you know what? I'm going to go to the toilet. Let's see how this price turns out. I hope you guys can't hear me, though. That'll be kind of awkward. Hey! Our loss has gone from minus 2,500 to minus 1,500. You see what I said about just making money instead of losing it? You see what's happening right here? That flush was gross. Too bad, my buddy. Too bad. Anyway, guys, I'll tell you all, make sure that you go to the Discord. I'll leave a link down below, and if you're also looking to trade, don't be as dumb as me. Do the exact opposite of what Ched says, and you'll make tons of money, apparently. Now, financial advice. Anyway, there's a link for that pinged, or the first link to the description. And I'm telling you guys, you can get upwards of $30,000 worth of trading bonuses, so it's always worth checking out. And if you're already made an account, but you want to switch it up, join Discord, and I'll tell you how. You can still join all my other giveaways, because I'm going to do a couple of really crazy giveaways soon. So just join Discord and ask, how can I change my status? If you, for example, just made an account without using my link, you can still change it. It's going to be fine, all right? Because I'm going to do a couple of giveaways only for people that are in my team. We're going to do a couple of competitions only for people in my team. And so switch it up. It's very simple. I'll tell you guys exactly how. Just join the Discord, and I'll explain everything to you. We're making money. Anybody that says buy the dip. Right now there were a couple of people. You guys were smart. You guys were very smart. Yeah, look at that. We're making money again. The biggest dip is in. All the people tuned out the moment that we were at a big loss. Right now, though. Somebody says, I never believe giveaways. Please understand, guys. You can always verify. You can always ask people. We've done multiple giveaways in a very public manner. We gave away $10,000 November of last year or so. Just PM the giveaway winners. Just text them real quick. Ask, how did it go? Or check back at the videos, see the people's reactions. I have some guys like Tanvir who's still texting me every couple of days. You know, he's a very loyal follower now. And usually there's only a couple of people who, like a couple hundred people who enter or so. Usually the odds are pretty good. So yeah. It's March now. How often have you given away $10,000? Yeah, let's get back to that one indeed. All right? How often have you decided to, you know what, I have $10,000 in my pocket right now. Let me give that to somebody. How often have you done that? And then let's continue this conversation. Somebody says, long Bitcoin at 27.3 thousand. My friend, Bitcoin right now is at $27.4 thousand. So you're saying we should wait a little bit and then long again. You are a risk taker. Some of you guys are yeah, I guess he took it very literally, you know? Just don't lose money. So he's saying open more long positions to not lose money, because Bitcoin's price ultimately always goes up. On the short term, he might be screwed, eh? On the short term, he might definitely not like this. But still, maybe he's a genius. Maybe he's the genius of his family. Maybe that's right. Anyway, we have learned something today. Somebody says, we have a new WhatsApp number, and we wanted to let you know about it. Please use our new WhatsApp number from now on. But I don't know what this is or what this is. Let's see. I thought maybe in the stream here, maybe at the end, it will still bounce up so we could still have a little bit of faith in chat. But no, I think we learned a lesson. Never. You know what? Let's wait it out a little bit. Let's give it another 15 minutes. I know a lot of you guys are thinking, oh, wow. But let's try it. Let's wait a little bit. Let's wait a little bit. And please do not copy what I'm doing here, because, yeah, the probabilities of, you know, losing money are definitely out there, because we're listening to chat. And chat usually is not the best ideas. Maybe, however, again, I'm going to try it again, though. I'm going to put another $5,000 down, and we're going to see. Or maybe we should do $10,000 this time. Just go crazy a little bit and see if the chat is actually smart or actually stupid. Because this time was just a test run. Right? The people didn't know exactly what to do. The people didn't know what to think. But next time, which is hopefully tomorrow, people know what's up. People have practiced, and they know exactly what we're up for. Everyone is wrong, Dusty. This dip ain't over. We're up a little bit. We going long? You guys are crazy. You guys are crazy. Just go to bed. Just go home. Just sleep. Bitcoin's recovering a little bit. We have a couple of hurdles along the way. But it's a 1 minute chart, though. What am I going to put in here? All these lines mean nothing. It's a 1 minute chart. I know. Oh, you guys are nuts. With the right dip, there's always a party. That's also true. Who have no Scooby-Doo in trading, please don't say anything. Let smart people make money. Yeah. David says, just lose some money. You're right. You're right. Somebody says, put 5,000 on XRP. Any day now, the lawsuit is going to be over. I have enough XRP, I think. Sean says, I can save you 10,000. The chat is dumb. So we shouldn't do what chat says, maybe? Ati says, I go sleep not too long. I wait 26,000 or something like that. And then sleep. All right, fair enough. I mean, we're at 27.5, 27.6 right now. Not too bad, it's recovering a little bit. Oh. It's recovering. Maybe this was the biggest dip. Maybe the biggest dip is over. Wait till the Asians wake up. Yeah, it might be a couple hours still, but hey. If you're trying to learn, somebody says trying to learn for you. Please, if you're trying to learn something, don't follow the chat because chat has some interesting figures in there. This is just for fun. Please let me do the money losing. Don't lose your own money. Make money. As I said before, it's so simple. If you're homeless, just buy a home. If you're losing money, just make money. Please. People are going to take this so out of context and think I'm a dumbass. It's okay, though. All right? Hopefully you guys are with me. You guys have been awesome, though. I love this chat. This is really good. This is really good. You guys are awesome. This chat, this is what I want to see every single day. If I do a live stream, these are the types of people that I like to be with. These are like the type of people that I like to sit around. Somebody says this will make great TikTok content. I don't know how to make those, man. Somebody says, chat, I'm following you. Is XRP going down or do you guys still have hopes? Asian is awake. Here, I'm awake. I'm in Asia, too. He says, got liquidated on ETH trade. Damn, that's wild. Show XRP chart. I mean, XRP, if you look at it from the 1 minute perspective, it's doing pretty good. 30 minutes is kind of garbage. It's back at 42.7 cents. Moving down just like Bitcoin, just like anything. ETH, yeah, I understand you got liquidated. It's down a significant bunch. It went down to $1,720. Bitcoin is our key here. Wesley says, 280 people watching, haha, no content, only crazy talk. It's not crazy talk, guys. We put a $50,000 position. It's pretty, something, I guess. Somebody says, and you know what's even funnier of all? Even right now as we speak, the majority of people have pressed long. Right? There's 250 people, out of which 62% said, yeah, you know what, Dusty? Might be best to hold on. I don't know exactly who hurt you or what happened, but you guys are an interesting breed. And that's why I love you. I think that's why I love you guys, every single one of you. You guys are awesome. By the way, the burger, if I had to rate it from 0 to 10, solid 7.5. Solid 7.5. Am I friends with Alex Cobb? I don't really know him, to be honest. I think he's a good guy, but I don't know him. I don't think I've ever spoken with him. We need to reach the moon. It has not been reached yet. It's all a scam. Who's good at making TikToks? Maybe I should make this into a TikTok thing. Again, not my thing, though. I'm not a TikTok type of guy. Honestly, before I used to hate TikTok a lot. Right now, it's getting better and better. All right? But, yeah, this was funny. And again, for anybody that thinks of what is the strategy next, I think the best strategy from here on forward is just to buy more crypto and not lose money. Yeah, that's the conclusion. Enough conclusions for today. Who's buying that Bitcoin crap? I think Bitcoin is pretty nice. Somebody says have an XRP long open. You're a wild one. Is it a juicy one, though? Do you have a lot of money in the line, or are you chickening out as well? Again, Tomorrow, let's do this again. Let's try it again. Let's see what the chat thinks. If we lose $10,000 in 1 month or so because of chat, it's okay. It's doable. You know, I love you guys. So what does that cost for content? It's not bad. It's not bad. We can. John Dean on in 30 minutes. Okay, let's see that. What happened, Dusty? We let the chat decide our trade. Yeah, and it was definitely something. It was definitely something. Dusty's wearing green, going up again. I mean, I don't know about that one, Chief. I think we're going to call it quits and try again tomorrow. See if you guys have better luck tomorrow. You want to do the stream again or no? Should we do it again? Just try it again? See if chat is actually stupid or really good and we just got unlucky? What do you guys think? Let's do another 5,000 bucks maybe. Maybe that's smarter. Not too much. Not 10,000. 5,000 bucks. And this time we spread it out more. We do it again tomorrow. Fable says, next time let the chat put in the money and you call the shots. No, that's a bad idea. I put the money and they call the shots. And if they win, they make money. If they lose, well, then they're just stupid because then they make no money. So it's not smart. All you have to do is just make money. That's what you do. Waste of money? You see, this is the mindset of losing money. Because if you just say you're not going to lose money, like the chat tomorrow will, it's all going to be good. Guys, that was it for today's stream. Hopefully you all enjoyed it. We're back tomorrow with another video, maybe another stream. We'll see how that goes. And I'm going to cut my hands off and never trade again. Maybe that's also a smart idea. Yeah. You guys are freaking crazy. I should never listen to chat again.